Hi, I hope everyone will be fine in your home. Okay, stay home, stay happily. Okay, eat healthy foods. Okay, still now we finished chapter 3 money. Okay, in money also we have cash inflow and outflow. In that we have problems we will see in the class. Okay, now we going to see a banking. Okay, what is mean by banking? What are the things are there in banking? Now we going to see that. Okay, first, what is mean by bank? Bank is an institution which borrows and lend money. It's a simple meaning is given by myself. Bank is an institution. Okay, bank is an institution which borrows and lend money. We can borrow from there, and we can deposit and we can lend the money from that institution. That is called banking. Okay. Then we can see a proper meaning. Okay, proper meaning or proper definition. A proper definition for banking na, banking means the accepting for the purpose of lending or investment of deposit money from the public, repayable on a demand or otherwise withdrawable by check, draft or order or otherwise. It is called bank. Okay, which means banks means usually they will accept a deposit. With the deposit only they will lend the money as a loan from the to the public, and repayable. If you deposited the money now, if you need money now, what you will do? You will withdraw by a cash or a check through a check. We can withdraw the money from the bank. Okay, this is called banking. Okay, the next one is meaning of commercial bank. Commercial bank na is a financial institution which perform the function of accepting deposit from the general public and giving loan for investment with the aim of earning profit. It's a proper meaning of commercial bank. In fact, commercial bank, the name itself suggests are profit seeking institution. A commercial word itself suggesting it's a profit seeking institution. Banking business, the commercial bank na, the banking business to earn a profit, that is called commercial bank. Okay, then functions of commercial banking. So what are the functions are there? What are the things we will do in a commercial bank? Okay, commercial bank is classified into two. The first one is a primary function, the second one is a secondary function. Primary function, the primary function is the major function. What are the major function we will do in a bank? The first one is acceptance of deposit. Acceptance of deposit is the first major thing they will do in a bank. A commercial bank accept the deposit in the form of current account, saving and fixed deposit. These major three things in done in under acceptance of the deposit. Usually in a bank, one saying will be there: deposit or the lifeline of bank. If you people, the customer deposited in the bank only, in that money only they will lend, they will keep as a reserve, they will lend to the poor people, they will lend as a loan. So everything is done by the deposit. Okay, the deposit, the public deposit is called as a capital for the bank. So the deposit is the lifeline of bank. It's a saying usually in the bank terms. What does it mean by current account? Such deposits are payable and a demand are therefore called demand deposits. For example, they can be withdrawn by the deposit any number of time depending upon the balance in account. Usually, those who have account in a bank, saving account, they can withdraw a money for 2 to 3 times per day. But 2 times per day. But those who have a current account, they have a number of transactions, number of checks per day or per month. Okay, for examples, those they have online bank facilities, they can withdraw a check, they can transfer the cash, they can give checks to everyone at a time. So they doesn't have any limitation. The current account people doesn't have any limitations for the transactions. Okay, these accounts are generally, the current accounts is generally maintained by a businessman and an industrialist who receive and make a business payment large amount. They doesn't have any restrictions, so they can pay a large amount to the other person, they can receive a large amount from the other person. There is no restrictions. Through checks they can receive, through cash they can enclose that. Okay, that is called current account deposit. There is no restriction. What is the major drawback in current account na? The bank does not pay any interest for their deposit. If they left 2 lakhs, 3 lakhs in a 20 lakhs, 30 lakhs in a bank, and also they will not provide any deposit for any interest for them. for their deposit. Why not? They are usually they are they are circulating the cash, so it will not be stagnant. The cash, one day it will be 1,000 rupees balance, the other day it will be 10 lakhs. So they will not have a stagnant cash. They will circulating continuously, no. So that's why they will not provide interest for the current account holder. For their deposit, they will not provide interest. The second point is fixed deposit. A fixed deposit have a fixed period of maturity. And a referred as a time deposit. A fixed deposit is it doesn't have any proper it doesn't have any separate account. If you people are current account, if you have current account also, you people can keep fixed deposit. If you people belongs to saving account also, you can keep this fixed deposit. What's mean by fixed deposit? It is have a fixed period. It's have fixed time to mature. Okay, for example, if a time of ranging for a few days or few years, these are neither payable on demand or enjoy a check facilities. They can be withdrawn only after the maturity. For example, a specific for if you people want one, if I put 1 lakh in a fixed deposit scheme, after 5 years I'll get written back, it is a 2 lakhs. This is called fixed maturity. After 5 years I can get double the amount. So this is called fixed deposit. So usually compared to the saving account, this fixed deposit carries higher rate of interest. Compared to a saving account, this fixed deposit will carry higher rate of interest. So they are not treated as a part of money supply. They can't get incentive. If after the finishing the maturity period only we can enjoy the benefits. Before that we can't do anything. Compared to your saving account, compared to your current account, the rate of interest will be higher in your fixed deposit. What is mean by saving account deposit? What as usual normal individual will have, everyone will have the saving account deposit. These are the deposit whose main objective to saving account is most suitable for individual household. They combine the features of both current account and fixed deposits. Okay, they are payable on demand, and also the banker may allow 4 or 5 check in a month. What we saw in a current account, there is no restriction for per day they can finish per checkbook. Full checkbook they can finish in 1 day. There is no restriction. They can do whatever they want. But in a saving account, per month they should issue 4 or 5 check. It should not exceed more than that. That is a restriction for the saving account. Interest paid on saving account deposit is less than or fixed deposit. The interest is properly they will pay to their saving account. Okay, so this is called saving account deposit. The best example for saving account deposit Modi Prime Minister. Modi Prime Minister invented a Jan Yojana scheme. Everyone should have a separate saving account in any bank. That is called Jan Yojana. Through this, everyone is after 18, everyone should have a separate account. 0 rupees, for 0 rupees they should open a separate account. That is called Jan Yojana. It is introduced by our Modi ji, Prime Minister. So that is called saving account deposit. Through this they can inculcate the saving habit. So that's why they invented this Jan Yojana. Okay, so the acceptance of the deposits plays a major role. The saving schemes plays a major role. A second primary function is it gives loans and advance. It gives loans and advance. The second major function of commercial bank is to give loan and advance, particularly to the businessman and entrepreneurs, thereby to earn interest. For example, if you people get deposit from the public, you should pay a return as an interest. Now, how you will pay? Okay, so how you will pay? The bank, how they will pay the interest to them? Through their deposit, they lend loan. Through that deposit only they will lend a loan, and they will pay interest to the depositor, and they will get the interest from the creditors. Okay, a banker keep a certain portion of the deposit itself a reserve. They will not lend loan everything. Now you see that S Bank situation. You heard that S Bank problem. The private bank, S Bank, they got minimum deposit. They gave maximum loan. Now what they did? They got a many problem. They closed the bank. They dishonored. They fully collapsed. So usually the bank should have a certain rules. If they get deposit na certain amount they should have as a reserve. They should not use that. They should keep as it is. The remaining part they should give a loan as advanced in the form of cash credit, demand loans, short term loans, overdraft. So what are the things we can do? We can do that with the remaining cash. After reserve, what we have, we can use for the certain purpose. Okay. First, what is mean by cash credit? Cash credit will not allowed to everyone. It has some eligibility to use this cash credit. For example, they should have some credit limit. If I am a current account holder, I can use that cash credit. Usually, it's like a credit card. Okay, your credit limit should be for example, my salary is 1 lakh per month, but my credit card limit is 60,000 per month. Okay, I can use that credit. Okay, with a certain amount of given security. If you people should provide some security for that. For example, your salary statement, or otherwise your current asset, your stock statement, some statement you should provide to the bank. On the basis of security, they will provide a credit limit to you people. For example, your salary statement, your salary is 1 lakh na, they will provide your credit card limit is 60,000 or 50,000 for that. Okay, you people can use that, and interest is charged bank on drawn or utilized portion. For your example, your credit card limit is 60,000 na, you people used only 10,000 per month na, what they will do? They will charge interest for only 10,000. What amount you utilize, no, that part alone they will charge interest. That is called cash credit. What is mean by demand loan? A loan which can be recalled on demand, it is called demand loan. A good example for demand loan is housing loan. Okay, if you people want to build a house, it's a demand. So for that you will get, no, that is called demand loan. There is no stature of maturity. There is no any stature of maturity. The entire loan, for example, you people want 10 lakhs loan na, the entire loan is amount is paid lump sum to the borrower. The bank will pay the entire amount to the borrower lump sum, 10 lakhs together. This like a security broker. You should provide a proper security. If you people have an idea to get a house loan, na, you should provide your land documents to the banker. Then only they will give you loan. If you provide proper security only, they will give you loan. Okay, after that it have some fluctuation na, each month you should pay an installment. The installment should be fixed, and each and every month you should pay the installments. That is called demand loans. Short term loans. What does mean by short term loans? Short term loans are given against some security as a personal loans, or to finance working capital, personal loans, medical loans, marriage loans. These is all called personal loans. To finance working capital or as a priority sector advance. The entire amount is repaid either in a one installment or in a number of installments over a period of loan. Okay, it should be less than 2 or 3 years. The short term loans should be repaid less than 2 or 3 years. The entire, compared to your demand loans, the short term loans have some restriction. It should not get more than 5 lakhs. It should be repayable minimum 3 years, maximum 3 years. It should not exceed maximum 3 years. Within that we should repayable. The short term loans have some restriction. For example, if you people take 3 years time, within one installment also we can pay that. So that is called as short term loans. Then your secondary function. Secondary functions are classified into 4 classification is there. The first one is discounting bills of exchange or hundis. A bills of exchange represents a promise to pay a fixed amount of money at a specific point of time in the future. A bills of exchange, it is like a document. Okay, it is also can be encashed earlier through a discount process of commercial bank. Okay, what is mean by bills of exchange? Okay, a document acknowledging an amount of money owed, a consideration of goods received. It is a paper asset signed by the debtor and the creditor for the fixed amount payable on a fixed date. It's a best. I'll give an example. A buy a goods from a B. Okay, A buy a goods from a B. B is a owner. A going to buy a goods from the B. he may not pay B immediately. So A can't pay the money B immediately. So what he did now, he settled the debt. Instead of giving a bill, instead of giving a money, he gave a bill of exchange. What is there in the bill of exchange usually? Now they state the amount. I'll give the state the first what they will do. They state the amount of money owed and the time when they will settle the debt. That usually will be there in the bill. Suppose B want money immediately. A will give after 3 months. Suppose the B want money immediately. Now they will encash the bill through bank. They will give the bill through bank. They will encash. So what they will do now? Immediately he will represent the bill of exchange on the bank for discounting it. The bank will deduct some commission, 3%, 4%. They will deduct as a commission and pay to B present value of the bill. For example, the bill value is 1 lakh na, they will provide commission for example 5% na, 95,000 they will repay to the B. The remaining amount after the bills mature, they will collect from the A. For example, after 2 months they will collect 1 lakh from the A. After the bills mature, they will collect from the A. Okay, from the specified period. The bank will get payment from A. It is called bills of exchange. Discounting bills of exchange or a hundis. Okay, what's mean by overdraft facility? Overdraft facility is not given to everyone. Those who have current account, they will get this overdraft facility. Okay, a overdraft facility is an advance given by allowing a customer of keeping a current account to overdraw. Overdraw now what? What is mean by overdraw? In your bank account, you people have 5,000 now. Immediately you need cash now. You people can draw 10,000. They will give overdraft facility. For example, you people will forgot. You people have giving much checks. Suddenly you forgot the balance what we have in a bank. Suddenly we give check for 10,000. In your bank we have only 5,000 now. That time it is an important customer to the businessman. Okay, if the bill is dishonored, it is it's not a good thing. It's not a goodwill for our company. The reputation will be spoiled. So that's why the bank will call and confirm, I want to pay that. Yes, you pay that. Abdina the customer, if you you pay that and customer agreed na, what they will do? They will pay that 5,000 and get interest for that 5,000 from the banker. For the reputation, for the current account holder reputation, they will do that. Reputation for their goodwill of the company. Okay, that is called overdraft facility. Only for the current account holder they will issue this facility. Okay, then agency functions of the bank. What are the agency are there? We have much facilities in the bank. The first agency functions, not transfer of funds. For example, I want to transfer monthly, I want to transfer particular funds to the orphanage. Abdina, I just intimate to the banker na, they will change. I will intimate to the banker na, what they will do? They will, as per my direction, they will do? They will, we are an agency function of the bank. In that we are transfer of funds. According to the customer guidelines, they will transfer funds to the orphanage. Whatever they need, they will transfer. For example, demand draft, mail transfer. Suddenly we need to pay a college fees as a DD na. They will transfer funds within a minute. Mail transfer, telegraphic transfers, etc. They will do according to the customer guidelines. Collection of funds. We want to collect, if you people got many checks, you give bunch of check to the banker and collect everything, and you gave much information, and they will do through checks. They will collect the checks, bills, hundis, demand draft. Behalf of the customers, they will do collections of funds. Payments of various items. It makes payment of tax, insurance premiums, bills as per the directions of the customers. For a payment of tax, insurance premium, if for example the customer is very busy, have much organization, so once he guided everything to the banker na, he will do everything. Payment of tax yearly, once if you submitted the tax bill na, he will pay the tax. Insurance premium, bills as per the direction of the current bill, everything. Electricity bills also paid according to the customer directions. Purchase and sale of shares and securities. So according to if you want to purchase or sell shares and securities na, you can get the guidelines from the bank. which share is good, which security is good, how we can invest, we can get the guidelines from the bank. Okay, collection of dividends and interest on a shares and debentures, we can collect a dividend from the company behalf of the shareholder. The banker will collect the dividend from the company and interest from the debentures, okay, behalf of the customers. Act as a trustee and executors of the property. For example, we have much property now, they will act as a trustee behalf of the customer, and they will collect the royalty, rent, everything, lease amount, everything they will collect instead of customer. Okay, the letter of reference, the letter of reference is very important. What is the economic position of the customer? For example, you're going to get much loan from the foreign bank now, the Indian bank should give a reference. Economically the customer is very good, she have much deposit, she have a good reputation, so the company is goodwill, everything is mentioned in the letter of reference. The letter of reference is issued to the other bank about the customer's position, about the customer's economic position, and the goodwill and the reputation will be. Then the last one is performing general utility service. What is the general utility service? Na? Locker facility. Usually, if you have much jewel in home, na, it's not safe to have it in a home. Many will have this locker facilities, you people will be aware, I think. Purchase and sale of foreign exchange and currencies. For example, the customer want to go and live in abroad for a excursion, for a tour, for that time, which means what they will do now, they will circulate the Indian currency and they will get the foreign currencies. So that is the exchange of the foreign currencies. Okay, then underwriting securities issued by governments, then traveler check, gift checks, everything will be performing general utility service. Then commercial bank is classified into two: scheduled bank and non-scheduled commercial bank. Scheduled bank is classified into three: public, private and foreign. Public bank is classified into two: SBI and subsidiaries, and other nationalized bank. Okay, first we will see what is meant by scheduled commercial bank. Types of commercial bank. The first one is scheduled and non-scheduled. Scheduled bank now are those bank which include second schedule of the Reserve Bank of India. Scheduled bank must have a paid up capital reserve at least 5 lakhs. They should have minimum 5 lakh as a reserve in a RBI. What is meant by RBI first? I'll try to explain what is meant by RBI. Scheduled commercial bank. First I'll try to explain what is meant by central bank. Central bank na everything, all the banks are undergone by through this central bank. A central bank is otherwise called bankers bank. All the bank is monitored by the central bank. So the central bank is known as RBI. Okay. Then scheduled bank. Scheduled bank na RBI is given permission to have a bank. So that is called a scheduled bank. A scheduled bank must have a paid up capital and reserve at least rupees 5 lakh. Everyone should give some reserves to the RBI. For example, we have a SBI in India. Na SBI should give a reserve as a 5 lakhs, more than 5 lakhs in a RBI. Some of the important scheduled banks is SBI and subsidiary banks, nationalized bank and foreign banks, etc. Then what is non-scheduled bank? The bank which are not included in the second schedule of RBI is known as non-scheduled bank. A non-scheduled bank has paid up capital reserve less than rupees 5 lakh. Clearly such banks are small bank in the field of operations is also limited. The corporation banks are there, no? That is called non-scheduled commercial banks. The post office they can accept the deposit but they can't lend the loan. That everything we can come under this category of non-scheduled bank. Public sector bank, na you people very aware about the public sector bank. It is a government bank. We have much government bank: SBI, Indian Bank, Indian Overseas Bank, then AX, Indian Bank, Indian Overseas Bank, and Canara Bank, Bank of Baroda, we can give a best example for the public sector banks. Then private sector banks. Private sector banks, na, for example, HDFs, Kotak Magendra, Yes Bank is the best example for the private sector bank. Everything is held privately. Okay. Foreign banks, na, HSB, Citibank, Royal Bank of Scotland, Bank of America. Okay. This bank will have their big bank will be in foreign countries. The small branches will be there in the head of the bank will be in the foreign countries. The branches will be in India. So that's why it is called foreign bank. A private sector bank, na, um, the bank was owned, the employees will be privately, it will be employed here. So that's why it is called private sector bank. Everything is done by guidelines of the government. Public sector bank, na, everything is done by the government. Okay. Private sector, na, the guidelines will be there. Foreign bank, na, the guidelines from the foreign country, the main branch will be in foreign, the small branches will be in here. The best example for that is Citibank, Royal Bank of Scotland, Bank of America, and HSBC. For private bank, example is HDFC, Kotak Magendra, Axis. For the public, SBI, Indian Overseas Bank, Indian Bank, everything will be there. Then public sector bank will be classified into SBI and subsidiaries and other nationalized bank. SBI bank alone will be in a separate for the public sector. The other nationalized bank, na, Indian Bank, Indian Overseas Bank. So everything will be in another category. Then the next topic is the central bank. It's a very important topic. The central bank is the apex institution of the monetary and banking system of country. Everything is circulated. The central bank is otherwise called bankers bank. Everything is supervised. All the bank is supervised by the Reserve Bank of India. Okay, that is called RBI. The central bank is the apex institution of the monetary banking system of our country. In India, the central bank is known as Reserve Bank of India. What is the necessity? Why we need a central bank? Okay, everything we can see here. Okay, a necessity of central bank. The monetary system require management. For example, the cash will be handled by everything. Na, they can mishandle. So the price stability, the employment trust. Almost the modern economy aims to achieving the twin objective: full employment and price stability. If you the handling of the cash, monetary system, each and every, those who are having monetary system, if they should honor and they should execute it, the management should have some eye on them. Okay, so the monetary system requires management. It is compulsory. A banking system requires control and regulation. Now you people know this Yes Bank problem. They issued much loan apart from the deposit. So what they happened? They go and went in a problem. So that's why. So the banking systems have some rules and regulation and guidelines by RBI. They should follow that. Then functions of central bank. Issue of currency. That is a major function. Okay, we can see what are the function now. Pumping is more money when a market is dry to cash. So everything we have much. RBI's two department, namely issue department and banking department. In RBI we have two departments. The first one is issue department and the banking department. So what is the functions of central bank? And before that I will see that. Then the first function is issue of currency. So the issue of currency, where the currency is printed, you people can be aware about that. In Nasik, RBI, we have a Nasik. In Nasik only they are printing the cash. The central bank is given sole monopoly of issuing currency in order to secure control over a volume of currency and credit. What does mean by monopoly? Monopoly na single authority. We have much bank, but there is only authority to issue a cash, to print a cash. Will have only RBI only have rights to print the cash. Okay, these notes are circulated throughout the country. Legal lender money. It also bring about a uniformity in note circulation. This is also called bank of issue. This function is otherwise called, the issue of currency is otherwise called a bank of issue. Central bank has keep as a reserve in the form of gold and foreign securities as per the statutory rules against the. In India, central bank is RBI. In world, what is as world? The central bank is providing rules and regulation to the other banks in India, But the world, we have one central bank that providing rules and regulation to all the central bank, all the countries' central bank. What is that called? IMF, International Monetary Fund. That is called World Bank. World Bank. Okay, this is giving all the rules and regulation and guidelines to the other countries' bank. Okay, then issue of currency is over. Then bankers to government. The central bank functions as bankers to the governments like commercial bank or to the public. It means central bank provide some banking facility to the government which commercially banks give to the public. It accept the deposit from the government and give a loans to the government. Usually they will accept the deposit from the government and they will provide a loans to the government, but these facilities was offered only by RBI. The government will have this facilities from the RBI. In maintain the accounts of the government and carry it out all the banking business, the government keeps their cash balance and the current accounts with the central bank. Similarly, the central bank accept the deposits and makes the payment behalf of the government. Behalf of the government, they will accept the deposit also. Similarly, a central bank accept the receipts and the payment behalf of the government. Also, central banks carries house change, everything, all the government function is done by the RBI. The remaining banks will not do the government functions. All the government, central government function is done by the RBI. So that's why it is called a bankers to government. Bankers bank and supervisor. All the banks is supervised by RBI. Everything is done properly. So the custodian, all should keep some cash reserve. For example, if you people have 1 lakh rupees deposit, this much percentage people should keep as a reserve. The remaining part alone, you people as a lend as a loan, cash credit, whatever you want, you can do. So the reserve ratio, everything is done guidelines is given by the RBI. Okay, the first thing, what is the given? Central bank is a lender of the last resort. Whenever the bank is short of funds, they can give a loan. For example, it's coming under, for example, IOB suddenly facing some drawbacks. That time what they will do now, they will give some cash or give some loan from the central bank. They can get some loans or some cash, or otherwise they can discount the bill from the central bank. So the central bank will help the other banks. They should follow their guidelines. The central bank will give some guidelines, some the rules and regulations. Second, the central bank, suppose if they face some loss now, they will come and help this other banks. It acts as a bank of central clearance and settlement and transfer. It is more precaution, usually very effective for the commercial bank are concerned. Okay. Then the controller of credit and money supply. Okay. How to control the money supply? Everything is controlled by all the banks. He have a control. RBI have all the control of the bank. Okay. The central bank controls the credits and money supply throughout the monetary policy, which consists of two parts, the currency and credit. Central bank has a monopoly of issuing note. Except RBI in Nasik, there is none other place we can't print a cash. So, except 1 rupee note, 1 rupee coin and the small coins issued by the government. Except 1 rupee coin and 1 rupee note, the remaining everything is printed by Nasik. Thereby can control the volume of currency. So they can control. They can if they stop the printing of the cash, now what will be happen? We will feel what? We need cash. The flow of cash will be less. So the main objective of credit control function is central bank price stability along with the employments. So it controls the credit of money supplying adapted to the quantitative and qualitative measures. Okay, so the RBI have the control of credit and money supply. Okay, instruments of money supply. What is the instruments of money supply? So in control credit money supply, how to instrument? What are the major steps we taken for the money policy to control that? The first one is banker rate. The banker will usually provide some interest rate. No, it will change according to the yearly ones. It will be changed. This the rate of interest which central bank lends the funds of the commercial bank in the way of cost of borrowing. Each bank will provide a separate rate of interest. The private bank, they will provide a separate rate of interest. The public bank, they will provide a separate rate of interest. The post office accept only deposit, they will not lend the loan, so they will provide a separate rate of interest. Then cooperative banks, small cooperative banks will provide a separate rate of interest. So everything is regulated by according to the guidelines by the RBI it is. Okay, so that is called banker rate. Then open market operation, the refer of buying and selling the government securities, the guidelines, the central bank of the lending the loan, and the central bank which reduce the cash reserves and concerns. So everything done by the open market operation. What are the operations, what are the things are done, what are the functions are done in the other banks, is everything is carried on by the RBI. Then cash reserve ratio. What is mean by cash reserve ratio? The commercial bank are required under the law of keeping certain percentage of their total deposit with the central bank in the form of cash reserve. I said no. For example, the company in a bank, they are depositing much. For example, they are started a new bank in a separate village. For example, Indian bank started in a new bank in a village. They deposited, all the public is deposited 10 lakhs. That 10 lakh, they should not give a loan, they should not use all the 10 lakh as a loans, and they should not use everything. They should keep some as a reserve, some percentage as a reserve, and the remaining part only they should use. That is called cash reserve ratio. The cash reserve ratio is maintained by RBI. The RBI should say, you get 10 lakh na, 50,000 you should maintain, 1 lakh you should maintain as a cash reserve ratio in SBI. You should not use this. The remaining 9 lakh you people can use it for a lending and accepting the deposit, everything. Exchange control. What is mean by exchange? The fifth point is exchange control. Okay. Then another duty of central bank to see the external value of currency is maintained. Okay. For example, external value of currency na, what is the value in a Indian rupee in a foreign currencies? That is called foreign currency exchange. Usually the foreign currencies exchange is done by a central bank. Little amount na we can do in other banks. Large lump sum amount you going to exchange as a foreign currency na, it is only done by RBI. Okay, so RBI making an application in the prescribed form. If you, for example, you earned from the abroad, we have a lump sum of dollars, we want to exchange as a Indian currency na, we want to get a prescribed form from RBI and we should exchange. If you have little $10, $20, $30 na, we can exchange from the other bank. Okay, lender of last resort. When a commercial bank have executed all the resources and supplements their funds at the time liquidity crisis, the approach of the central bank at last resort. Now the Yes Bank faced many problems. It's have idea to close down. That time all the deposit is refunded by RBI. The same thing. Suppose we faced any liquidity crisis na, sudden crisis. Suddenly we doesn't have a cash. We have a cash. Everything is blocked. So that time we can get a cash from we can approach the central bank and we can get a cash from the central bank. So it is approachable. The lender of last resort na, suddenly we face liquidity crisis. Suddenly our cash is blocked everywhere in a board. We can get a cash. We can approach the central bank and we can get a cash from the central bank. By rediscounting the eligible securities, bills of exchange, by providing loans against their securities, so we can get the cash from the central bank. Custodian of foreign exchange reserve. What does it mean by custodian of foreign exchange reserve? Many foreign banks are there in India. For example, Citibank, Bank of America, HSB, Royal Bank of Scotland. So many banks are there in India. So all the banks, they should provide some foreign exchanges will be there, like US dollar and British pounds, they will be exchanged. So the foreign exchange reserve is there. The central bank also function a custodian of country's foreign exchange reserve. Again, it is responsible for the central bank to stabilize the external value of national currency. Therefore, it keeps a certain minimum amount of gold and foreign currency. Usually, RBI should have a foreign currency. All the type of foreign currency, especially US dollar and British pounds. All the currencies, which means all the currencies are generally valued by your US dollars. So usually all the RBI have a reserve of particular, the gold and the dollar is in a central value of all the country. All the countries should have some amount of gold and some amount of foreign currency as a reserve in a RBI. That is called custodian of foreign exchange reserve. If they face suddenly certain loss, certain problem, for example, what is this happening now? Corona crisis. We can call it as a corona crisis. Through corona, many people doesn't have a work. With the help of central bank doesn't have a proper money now. With the help of this gold and foreign currency, he can let the gold and foreign currency to the other country and he can get the money and we can work for India. At the same time, in order to utilize the fluctuation in foreign exchange rates, central banks buy or sell foreign currencies in the markets. Okay, if you faced something lost sudden, with the help of this gold and with the foreign currencies, IMF, International Monetary Fund, or a World Bank will help for us. Okay, so that's why we have the custody of some of the gold and foreign currencies. It should be in a US dollar or a British pound. Okay, then clearing house functions. What is the clearing house functions? Banker receive a check drawn by other bank from the customer, which they have to realize from drawee bank. Similarly, check on a particular bank are drawn passed into the other bank, which have to realize them from the. Therefore, the central bank providing clearing facility of bank to come together every day and set off their check claims. For example, I have a bank account in IOB. I want to give my friend for 10,000 check in Indian bank. So I gave a check to her. So he went and he submitted a check to a bank. So they have a clearing facility. They want to clear the check, no? So all the facilities of bank, every day the set of the check facilities will be there. This clearing house function is done by the RBI. Independent separate realization of each check would take a lot of time. So therefore the central bank providing clearing facilities of bank to come together every day and set off their checking claims. For example, I gave a IOB check to my friend for HDFC. So this is a public sector and private sector. It takes time to claim the check. So this clearing facilities is done by the RBI. So it is easily redeemable. Easily we can get a cash. Collection and publication of data. It also be entrusted with the task of collection and compilations, statistical information relating to the banking and other functional sector of the economic. Monthly once, everything is all the data, what are the transaction happened, how much we have, how much we got a deposit, how much we lend a loan, how much we paid as a interest, everything, all the data is submitted to RBI yearly once or a monthly once according to their wish. Then we saw many banks, comparison between a central bank and commercial bank. Okay, you can see the comparisons. Okay, it is the apps bank in the money in a country. Apps everything is the Apex bank in the money market in a country. It is Apex everything is done monitoring. Okay, it's monitoring all the bank. The next point is what is the commercial bank? It is merely until the banking structure of the company. It is have a banking structure. It doesn't have rights to supervise anyone. Okay. The second point in your central bank, it primary aim to general public welfare. The primary aim of your central bank to welfare of the public. Okay. But your commercial bank primary aim is to make a profit. The second one, it is the sole monopoly of right of issue a currency note. Except RBI, there is no rights to issue of currency note. A commercial bank is statutorily defined this function. Statutorily defined. There is no rights. Statutorily defined these function alone. It cannot deal with the public. RBI cannot deal with public. RBI only deal with the government functions. RBI do only government functions. It can't deal with public. Commercial public, it is directly deal with public and business firms. Okay, it will not directly deal. They will encalculate, they will circulate the commercial banks, but it can't deal directly with public. It deal only the government plans. It directly deal with only government plans, but commercial bank, it directly deal with public and the business firm. A fifth point, it act as a bankers to the government. It bankers bank. The government will get all the bank information from the RBI. It has no such responsibility towards the state. Commercial bank doesn't have any responsibility. He will act as a bank. He will get the guidelines from the RBI. He will go according to the RBI guidelines. Sixth point, it decide it is monetary policy to realize economic stability and full employment in the country. It decides its monetary policy to realize economic stability and full employment in the country. So it's what central bank is working behalf of the public. So what are the public facing? A major problem is employment problem. So how to realize this? So what are the major steps? So everything is done by the RBI. It plays supplementary role, quite often regulated by the central bank. What are the things are done by the central bank? What are the regulation, rules and guidelines is given by the central bank? It will go according to that. Okay. Seventh point, it is the custodian nation, gold and foreign exchange reserve. Custodian nation, gold and foreign exchange reserve should be there. Custodian nation, neighboring countries will have some nation, so it should have custodian nation. It does not perform such functions. You don't want to perform such functions. Okay, I just to show you what is meant by check. See here, specimen copy for a check. See, payee. For example, your name is Gopal. Na, you're going to pay a check to Shalini. Na, pay Shalini. Rupees na 50,000. I'm going to pay Shalini. Na, amount in a word 50,000. Then in amount in a here, amount in a numeric, you wrote 50,000. Here the signature is there. No, in the top you should write Gopal, and you should give the check. Date is there. No, for example, today's date you should write, and you should give this check to your friend. Okay, for your friend. So that's why this is called check. The model of check you people can see. Then this is called DD. And DD na demand draft. Check, I'll say what is difference between check and DD na. Check issued by the customer. DD is issued by the banker. For example, those who are now only the online facilities are more. No, so now we want to join in college. Now everyone should pay your fees in online only. But before 10 years, 5 years now, all the fees was paid by DD only. For example, on demand pay na, you go to the bank for your account and you want to say, I want to take a DD in my college name. For example, I'm going to join in for example, I'm going to join in VAT na. The demand pay you should mention VAT. And for example, semester fees is 55,000 na, you should mention 55,000 and everything, and you want to sign in this. So the DD was issued by the banker, the check was issued by the customer. See, this is a sample copy, specimen copy for your DD. Okay, I think hope the class go on very well. Okay, thank you.